Okay, so let's start now. Okay, can you hear my voice? Okay, so let's continue. Probably I want to, like last week, I was talking about um, candlestick patterns. Like, actually, all my explanation is based on. Uh, okay, give me a second. Let me. So, I was talking about placing a trade using a confirmation with evening star or morning star pattern. Okay, you all know how evening star or morning star pattern look like. Well, when I talk about when we are trading on evening star or morning star, there's different ways that we trade evening star and morning star in forex and binary. So what I mean is that there's a way that you trade evening star in binary, and it's quietly different from trading evening star in forex. Now you may ask me, what exactly am I talking about? I'm talking about a situation whereby you saw a evening star pattern. This is what we call evening star pattern. Then you decided to place a trade using this pattern. You saw this pattern, then you decided to place a trade. The market, the next direction should be down, right? But this only can work for you, especially in forex, not binary. This cannot work for you in binary. Reason why? Because in binary, you trade 1 minute expiry time or any expiry time you want to trade on. Like if you are trading on 1 minute expiry time, you also trade on 1 minute candle. Or 5 minute expiry time, you trade on 5 minute candle. Or 2 minute expiry time, you trade on 2 minute candle, and so on and so forth. So in a situation whereby you are trading on 1 minute expiry time and 5 minute candle, the first candle went down, second candle went down, the third candle went up. This after you saw this pattern, you enter the trade here. This is your entry point. First candle, second candle, the third candle went up, the fourth candle went up again, the fifth candle went up again. You see that 5 minute candle that you are trading has expired and you lost the trade. Before you know, you will now see a massive drop to the downside. That is why I say when you are trading all this pattern, you should not trade it the way you trade in binary option and in forex. In forex, when you see this pattern, you can just place your stop loss somewhere around here. Then wait to see anytime anything can happen in the market, because market might decide to some buyers might decide to buy the market again whenever they see this pattern. So the market might just drop again. Okay. So you said the reason why the market dropped the here is because of what has happened on the left side. At times you might see that after this evening star pattern, the market drop very strongly. So in this kind of situation, whenever you see it like that, it means that don't ever think the market is, let me say, is going to give you 100% winning ratio, because most of the time when you are selling, most traders also buying. Okay, we are selling, most traders also buy. So look at the chart now. Where do you see evening star pattern? This is evening star pattern. You can see evening star pattern. But when we see evening star pattern, a lot of traders might have entered the trade. Oh, let me sell this trade. They enter the trade. Let's say the after the candle close here, like 5 minute expiry time, one, two, three, four, five. and immediately the market starts moving downward. You can see. Okay, but there's one thing I want to teach you guys today when you are trading pattern. Okay, when you are trading pattern, let's say this is a resistance area and you trade a pattern. Evening star pattern is something like a head and shoulder pattern, right? Evening star pattern is something like head and shoulder pattern. Let's say the market approach the level, something like this. Okay, let's assume this is our evening star pattern, because if you go straight to lower time frame, if you use higher time frame to check for evening star pattern and go straight to lower time frame, you see that the formation of the evening star pattern is like a head and shoulder pattern. So let's assume that the market gave you this pattern, then you should know that whenever, when we are trading the head and shoulder pattern, we always wait for pullback after the price break the neckline, right? So let's say after the candle close here, this is the neckline. This is the neckline. So immediately the candle rejects here, because after the candle went up, it break the neckline. So that's the same thing here. Same thing that happened here. Same thing that happened here. This is more like evening star pattern, right? And this is the neckline. This is the neckline. We are waiting for the price to come back to the neckline. They break out and we trade put or sell. Okay, that is our expectation. But see what happened when the price reached the neckline, because this is usually the neckline. Because after the market got rejection, it went up again and close here. So from there, the sellers entered and break this low. That's the same thing that happened here. After the market got rejection, stop here. It got rejection and went up again. Sellers entered and break this low. So if the price is going to go back to the level, wait for a rejection. That is why immediately the candle, the buyers reach the level, this neckline, there was no rejection. Immediately buyers reach the neckline, there was no rejection. So which means that same thing that is happening here, immediately the buyers reach this level, there is no confirmation for sellers to enter. That is why the market keep going up, up, up. Same thing here, there was no rejection from sellers. That is why the buyers keep pushing the price higher. So whenever you are trading pattern, always identify it as, let's say, on smaller time frame. Like if you are trading bullish engulfing pattern, how does bullish engulfing pattern looks like on lower time frame? For example, if you see, this is what I mean by bullish engulfing pattern. Okay, how does it look like? The sellers entered here, got rejected from sellers above rejection, and the candle closed here. So from here, the buyers break the level. How do you now trade this bullish engulfing pattern? You wait for a pullback. Once the price pull back to the break out of this level, then you can enter a call option. That is why whenever we see a bullish engulfing pattern, look at here. This is bullish engulfing pattern, right? Excuse me. This is bullish engulfing pattern. So this is where the candle open and drop to the downside, and from there the buyers went up, break the high. So we have to wait for the price to come to this level, and then you're gonna do what? Go with buyers. So, but if you didn't see any rejection, or maybe there's a breakout or something like that, that means the market is not respecting the level. Look at it. When I place the line here at the top of this bearish candle, when I place the line at the top of this bearish candle, the sellers close below the line. So which means, if assuming that the seller did not close below this line and close a little bit above this line, then it means the buyers are going to enter on the next candle, just like price moving up like this. Okay, then buyers took over and break this level. So once the price come back to this level, okay, once the price come back to this break of structure, the market is going to reverse. But if the market drop and close below, it might decided to continue to the downside. Something like this. Like if sellers continue and break and close below the level, and if that buyers decided to go up, they might got rejection from this level and then the market will drop. So it's just like head and shoulder pattern, right? Like this is the left shoulder, this is the head, and this is the right shoulder. So which means once the price close below this line, it means the market is going to, that is what happened here. Once the sellers close below the line, there was a huge rejection and the market got rejection from this level and the price dropped. So which means if you are trading on 1 minute candle and 1 minute expiry time, you should take note of this level. Take note of this level. So let's see what happened when the price reached the level. You can see there was a rejection. Any other thing? No, not yet. So let's say we wait for the price to reach this level. Once the price reaches this level, then we should know what to do next. So okay, because the level is just like head and shoulder pattern or Quasimodo pattern. Okay. So when you are trading something like this, okay, look at this. This is strong uh, red candle. This is strong red candle and a small green then and a big green candle. If you now place your line at the closing of this, let's say at the week of the like just like head and shoulder pattern. No, this is not like head and shoulder pattern. This is like um let me say this is more like Quasimodo pattern. Okay, but this is not like head and shoulder pattern. Head and shoulder pattern is like this pattern, evening star pattern. Okay, but this is not evening star, morning star pattern. This is not morning star pattern, and this is not evening star pattern because it's not like head and shoulder pattern. So let's say we place the line here. Okay, we place the line here. Then when the price rise to this point, the candle close here, the price rise to this point and seem to got rejection from here, and the market dropped to this level and got rejected and continue to the upside. So we have another level here which we can expect the price to reverse. Okay, we can expect the price to reverse. Also, we have some pattern here because when the price dropped to this point, got rejected from the here and also got rejection from here and continue to the downside. So let's say we now draw a trend line or horizontal line from here, like something like this. Okay, let me draw a line from the top of this. Okay, so when the price reach the buyers break the level and the market reverse to the downside and got rejection from here, we see that the next candle was green and the buyers keep pushing the price higher. But the next level which you can expect buyers again to enter is this, because most especially the market might not just respect this level, it might continue to the next level here, which means if the price drop to this point, you can expect the buyers to continue moving higher. Okay, so the way you picture patterns on lower time frame is also the way you should picture pattern on higher time frame. But most especially the one I want to teach you today, the one I want to focus more today is the morning and evening star pattern. Okay, morning and evening star pattern. Okay, the price is approaching the level, so let's see what will happen next. Let's open to another chart and let's find morning star and evening star pattern. Okay, this is more like a morning star and evening star pattern. This is morning star pattern. Okay, so the markets reached this point, rejected, and from here the buyers entered and closed above this level. So the sellers keep pushing the price down. This is where the buyers should enter the market, but no sign of buyers. The sellers close below. So immediately the sellers close below this level, they got rejection from here. Okay, they got rejection from this line. That is why the sellers keep pushing the price down. Same thing that happened to on Euro USD. Okay, same thing that happened on Euro USD, whereby you see, okay, Euro USD has reached the level. Let's see what happened. Now we are seeing a rejection, but that is not what I'm talking about. That is not what I'm after. Okay, something like this. Okay, the market dropped to this point. Market dropped to this point, and the buyers break the level. So immediately the buyers break the levels, the market drop again. Buyers supposed to enter, but the candle closed below. The candle closed below the level. So for that level can also be used as resistance. So what does it look like? It look like Quasimodo pattern. Okay, it look like Quasimodo pattern. Okay, like this is high, higher high. This is high. Okay, this is high. This is low. This is higher high, and this is lower low. So the price break the this high, then come back again and retest the level. So that is why sellers see that you can see that sellers push the price lower. Okay, so let's say assume now you enter 5 minutes. That is why I entered the trade. If you guys observe that the first trade I took before we started this section was this trade, that is why I expect this price to go down. Okay, so that is why the sellers entered. If you see this type of pattern, you know that the market will drop for at least 5 minutes. Okay, so let's say 5 minutes is your expiry time. Immediately the price break the level, you entered first trade. Say let's say first candle, second candle, third, fourth, fifth. You see that we have already won the trade. Okay, let's see what is going on here. Currently the market is now at the level, at the resistance level, and also it served here as a resistance. Let's see what 5 minutes we do. Uh, no, there's a gap. This is OTC market. Whenever there's a gap or something like this occur in the market, do not trade. Just skip the trade. Okay, because when there's a gap, it means something. It means another thing because market might just not be respecting gap, something like that. So just wait to see a good confirmation for your entry. Avoid whenever the market gap because I don't expect the price to gap. If I should expect the price to gap, it should be below, not above. So in this kind of situation, the market is going up. So I don't think the market is going to reverse. Um, let's see one more candle. Well, I cannot take this as a money star pattern, okay? Because this is the rejection point and this candle is not above the rejection point. So I can't take this as money star pattern. But it will work as using it as a resistance level, okay? Using it as a resistance level. Once the price break the level, see that the market got rejection and the price keep dropping, okay? This is evening star pattern, okay? So this is evening star pattern. After this candle, what I will expect is the price to drop to this level and the rejection. Once the price got rejection, then you can enter 5 minute candle expiry time. Okay, 5 minute candle expiry, a 5 minute expiry time using 1 minute candle. Okay, so because this is the level and they seem the price has break the level, the buyers has break the level. So what we are expecting the price to drop to this point. It might take time for the price to drop, but just hope that the price should drop to this point. Then you can place your trade with 5 minute expiry time. So Let's wait for that too. I think the market is going down here. This should be one, two, three, at least two more candle. The price should go more down. Um, well, I can't take that as evening star pattern. Let's see Euro JPY. Well, okay, Euro JPY. This is morning star pattern and evening star pattern. Then price also break the level, but we don't have any rejection here. Okay, it seems the price is rejected. We don't have any rejection. Nothing. Okay, yeah, I was expecting two more candle to go down, but it seemed the market, the buyers entered, and it seemed the price is now trying to go up. But the reason why I expect two more candle because if I should enter at 5 minute expiry time, no matter how this trade is going to be a winning trade because after the candle close below this line, this should be my first entry, first candle, second, third, fourth, and fifth. So you see what happened here? Because of the gap, the market is consolidating at the level at the entry point. Well, that was a okay. Here we expect the price to drop to this level. Then you enter 5 minute expiry time trade. Let me see one more example. Nothing, nothing here. Okay, I think there's no other opportunity. Okay, this is another level. Here there's no breakout. The candle didn't break the level, didn't break the upper line, upper level, didn't break the because this is more like when the price rise to this point, something like this. The market drop here and they pull back a little and continue to downside. So here should be a resistance level on the right side. So that is why the sellers are entering now the market with this is two, at least three more candle, because when the price reached the level, didn't break the level. So let's say we now enter the first trade, first candle, second candle. Like I'm expecting five more, three more candles, because this is more like a resistance. Okay, the buyers push the price to this point, the market drop, got rejected from here, and make a pullback, close here, then break. So here we have this as a break of structure. This is what I mean, break of structure. Those of you in forex class have said something about break of structure. Okay, uptrend. This is uptrend. The market reverse and create a small support area here. Instead of pushing right to the upside, it failed. Got no strength and the price keep going down. So here we have the break of structure here. Okay, so there are two ways the market can reverse. Either the market come back to this level and reverse, or the price rise to this point. This is our supply zone. After the break of structure, this is the supply zone responsible for the break of structure. Market can just continue to this supply zone and drop. Okay, so let's see what happened, because that is what I'm expecting, because the market should respect this support. Okay, becoming resistance, the first entry, first candle, second candle, third, fourth. I think the fourth candle is forming, but we don't know what will happen here. So if the price did not go down and keep going up, this should be the next level where you expect the market to reverse. Okay, because um supply zone. Okay, let's see Euro JPY. Okay, Euro JPY, I will expect the price to go up. There's a gap, and look at the candle that is forming. A gap down and open below. Let's assume the candle opens and still above this line. We can't place our trade here, because if you go with sellers, if you go with buyers, the market might still close as red. Okay, we don't know that, but let's wait for the candle to close, then enter 5 minute expiry time. I think this is a wrong entry. Okay, that is losing trade. Let's see Euro JPY. Euro JPY, I go with 5 minute expiry time. Okay, because I was opening the price after the price break this level. I was opening the price to drop to this point, then continue. Okay, so the candle gap, so we have to wait for the candle to close before we enter the trade. Here the market is still consolidating. I don't know why. So 5 minute expiry time really don't work here because of consolidation. So consolidation usually occur whenever you enter a trade. There are times the market move aggressively like this. There are times the market move like this after consolidating, continue to the upside. During consolidation, the reason why market consolidate is because if um if let's say assume that this is a resistance level, the price approached the resistance level, a lot of sellers might have decided to sell this trade, but buyers are also looking to buy the market. That is why once the price drop, you will see a bullish engulfing pattern that break the resistance level. So immediately the seller kicks in. When this kind of problem, when this kind of situation occur, it means this is a fake breakout. Okay, this is a fake breakout. So immediately the sellers kick in because this is a fake breakout. So in that case, most sellers are trying to sell, while some buyers also are buying at the level. So they cause this false breakout. The sellers now took the advantage to sell the market. That's why the market will drop. Most of the time, it usually occur during consolidation, and buyers try to enter, break the level before you know the market drop. That because most order are be placed at that level. You are not the only one that should buy at the level. A lot of traders are buying, some traders are selling. So that is why it's also okay. Let's see this. Uh, is the actual level. Here I should expect buyer's entry. Let's wait for this candle to close. Consolidation. Well, this is not what I was expecting here. I was expecting a bullish momentum, just like what I said. This is support area. Some sellers are also selling. So once they get a fake breakout and the price buyers entered again. Once the buyers entered again, the market will keep going up. Now, watch. You see that what that is what is going to happen because this is the support area whereby the buyer is supposed to push the price higher. So the sellers enter the market. So once the buyers apply force and enter the market, you see that the price will go up. Do not take this as a sell trade. Okay, this is exactly what I was expecting. Okay, same um, evening star pattern here. Evening star pattern here. Also, so many bullish, red, bullish, and red, but no sign of buyers to push the price higher. Let's just hope that there's no strong sellers that will force the price to go down. Okay, because most of the time, market usually observe the next level to reverse. And if you look on the left side, where do you think the market is going to reverse? Here, here, or here. So we have three places the market is going to reverse. If the market succeeds in breaking this one, definitely reverse here or here. Those are the barriers level. The market will likely to reverse something like that. So let's see how the buyers will break or come up again. Okay, I think the buyers now are coming up. You can see strong sellers entry. This is what I was talking about. This is what I was talking about. The market always look for the next resistance level to reverse. This is the next one, or here or here. So let's say the market reverse here, it might go down or consolidate, or go to the next one, go down and consolidate. But if the level is far, that means what you have to do is to be looking for a level whereby the price went up a little high and they come down to the level. So, and you now place the trade for 5 minutes. By the time the market, that means there will be enough time for the price to rise and hit that level. So for that minutes, or let's say within 5 minutes, you might likely to win the trade. Uh, I'm not okay with this. You see that buyers entered, sellers again entered. What I want is the bullish candle above this line before you buy. I think there's no other opportunity again. Okay, this is next one. Um, let's hope the sellers entered again. Still not nothing. Okay, so now we see sellers entered again, and let's hope the sellers didn't break the level. Two things I'm expecting here: a bullish candle or a bearish candle above this line with a rejection to go with buyers. But at this state, I don't see that happening. Well, nothing here to trade. Just one more trade, then we call it a day. Now the slash close below this line. Let's hope the buyers also reach this point with a rejection. Okay, remember the pattern: bullish, that is uptrend. Market reaches point, rejects here, up again, then break the level. So here is our next level where we expect. Okay, you see that the buyers entered and got rejected, or let's say break the level. Instead of sellers will come up again to this level to continue to the upside, also close below. Now what we expect the buyer to come again and close here, they sell. But it seems the price also still close above. Okay, so what are we expecting now is the price again to drop to this that same point, then you call. So you are waiting for sellers to close above this line with a rejection to buy, Or if the sellers again break the level, we are waiting for buyers to close below this level with a rejection to sell. Okay, but at the moment, nothing is happening. Like I said, this candle should close above the line. Come on. No. You see the buyers keep pushing the price higher. Soon after the single retracement. Well, it seems there's no other opportunity. They should call it today. So next week I'm going to show you how to predict next candle. This is just like predicting next market direction. Once you know how to predict next market direction, you know where the market is going. If the market is going up, then you should know where you should place call option with one single candle. Okay. If the market is going down, you should know where to place put option with what single candle. So that is what I'm going to teach you next week. But for today, I think today is just like predicting, just for predicting next market direction. Again, the bias is unable to break the level. So this pattern looks like this, something like this. Up, down, up again, not up to this level, then break. So here we have the key level. Okay, we are expecting the price to come to this point and reverse. If not reverse, the price again continue to the upper side. So we are expecting the price again to come to this level and reverse. But if unfortunately the market consolidate around here, this area, and then break the level. So we are expecting again the price again to come to this point and reverse, or expect the price again to come after below this consolidation, like this distribution phase, distributive phase for the market to drop. I think that is exactly what is happening here. After this distributive, the market break the level and then it's going down. Okay, I think I didn't observe that yet. So let's say this is the entry point, one, two, three, four, five. Well, the market is still going more down. So just like this, also, this is the accumulative phase. Okay, it's accumulative phase. The price dropped to this point, went up again, this level, and drop, reverse a little bit, drop, break this level. So this is our level where we expect the market to reverse. When the price reach this point, it consolidates. In this kind of situation, we call it accumulative phase. Okay, so when the price now finally break the level, it reverse to this point here, reverse to this level, and from there you can enter a buy trade or call option. That is where you see the buyers keep pushing the price higher. Okay, you will notice that the same thing is happening on Euro JPY. The sellers will keep pushing the price lower because of this distributive phase. Okay, distributive phase. So the sellers will keep going more and more down, downwards. Okay. This is like forex, so I don't want to bring the forex. Actuality is exactly what I want to teach in forex, but it's also good in binary when you are trading with 5 minute expiry time. So let's call it a day, guys. Let me prepare for forex and see you guys on next week. Next week, I'm going to teach you guys how to predict single candle. Okay. In case you don't understand how to predict market direction like this, so maybe you'll be able to understand how to predict single candle. So next week it's going to be another class. So if you are in forest group, we are starting by 10 p.m. 10 p.m. sharp.